Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Thursday, July the 2nd. Well, quite a bearish day today, a very large bodied red candle, which means that the bears have made very strong negative gain. We had the market opening at the high and closing at the low. This is the strongest candle that we can have in candlestick terms, and it's the most extreme bearish type of day that we can have. So with the market closing down at the low, it means that the bears have closed in control. They're showing very, very strong commitment, and they've been in control all day. Now, we identified the area above here as a zone of resistance, and we saw previously that there was price rejection around here, a lot of indecisive trading as it traded up previously, and then again as we approached, the size of the bodies became smaller, became red, small bodies, and then the sell-off. So we have a new first time frame downtrend, which is what we're on the alert for. So it was price rejection from this zone of resistance, and a very strong price rejection too, and now we're trading substantially below the Kijun-sen and the Tenkan-sen. We are still in a second time frame downtrend, and now we're approaching support levels at the cloud and then perhaps beyond. So what we will probably be looking to see is the top of the cloud holding as some sort of support, and the way that we'll see that is perhaps with an indecisive candle as we saw here, a spinning top, or some sort of bullishness coming back into the market, which could give an opportunity to buy for the market to trade back up towards this zone of resistance potentially. If the market does trade down through the top of the cloud, we have the support area defined by the swing lows of the descending triangle here, and then further down here we have support at roughly 846, and then roughly 828, and then we could be approaching the bottom of the cloud at some stage through here as well, depending on when the market actually trades down to there. Now, the interesting thing is that if the market does trade into the cloud and through this area of support, then as the days go by, the support of the cloud becomes higher and higher. So the support will be moving up to meet the market potentially if it does trade down through there. So just looking at our indicators though, we are still just trading above the Ichimoku cloud, which means that there still is some sort of positive bias to the market. But we have the Tenkan-sen below the Kijun-sen, which means that the market has a negative bent to it, and we're trading down below both of those, and that's certainly not bullish when we're trading down below both. Now, there is potential for a complex head and shoulders pattern to be forming here, and I'll just draw in the line. It's not complete yet, and it is a complex one because we have a couple of other peaks and troughs within the left and the right shoulder. So here is what we could call a complex left shoulder, here's the head, and here is a complex right shoulder. So if we have a breakdown beyond the neckline, and we've just drawn the neckline, we need to have a solid close and a very bearish close for the pattern to be complete. If the pattern is complete, then we measure the distance from the top of the head to the neckline and project that down from the neckline. Now, obviously, we can't just measure that on a log scale chart, which this is. So we actually look at the distance. So we'll do it roughly 955 to 885, which is about 70 points. And if we break out solidly here, the market could trade down to roughly 820 or so, which would be around this region here potentially. And that coincides exactly with where the cloud is at the moment, although, as I said, when the market starts trading down around here, then the cloud will obviously be quite a bit higher. So there is potential for substantial bearishness in the market, but strong potential support all the way through here with the cloud.